Good morning from London. I'm Anna Edwards alongside Guy Johnson and Lizzy Burden. We're an hour away from the opening trade. Here's what you need to know. The Nikkei soars and European futures jump as the US and Japan agree a trade deal with a 15% tariff on Japanese products, including cars. Meanwhile, EU leaders prepare for their trade talks in Tokyo and Beijing. Japan's Prime Minister could be out of office sooner than expected, according to local media reports. Plus, in corporate news, UniCredit looks to return more money to shareholders as it drops its bid for Banco BPM, while SAP says tariffs and FX hurt cloud growth in a big day for European earnings.
Well, Anna, that midweek injection of trade clarity looks to power this stock rally even higher. Can the EU copy and paste Japan's deal, at least when it comes to autos tariffs? It looks like that optimism powering European futures higher this morning, but very, very little appetite for that long-end Japanese debt. How can that ripple across the global market? The countdown to the opening trade starts right now.
They just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
Looks like a great deal for Japanese stocks this morning. That is the narrative that we're working with today, and we're trying to figure out whether or not ultimately what we've just seen signed between Japan and the United States is the benchmark for Europe. And these are the kinds of numbers that we're going to be looking at. European equities are beginning to look in that direction and try and work out whether that is the correct calculation. Japanese stocks, Anna, absolutely surging.
Yeah, absolutely. The Nikkei up right now by 3.8%. So real strength coming through, in particular in the automakers, but it's wider than that. There's a lot of positivity over there in Japan. And you're right, Guy, the markets globally are looking at this and asking, is this going to be, as you said, Lizzy, something of a blueprint for Europe? Well, maybe they can hope so. Let's have a look at some of the detail, because it might give us some clues. So the threat had been a 25% tariff, of course, most recently. And in fact, the tariff rate has been agreed at 15%, including cars, which, of course, had a higher tariff rate as a sectoral rate previously, so that's important. They are going to keep talking about steel and aluminium tariffs. So just like we saw in the UK deal, there are not all of the details assigned here, and that is something to bear in mind. We're seeing, as we said, Japanese cars really soaring, and the contrast between what we see in Japan and what we saw in the US yesterday, with GM down by 8% in session on the back of their tariff headaches, not to do with Japan, but to do with their Mexican, Canadian plants. There's so much in here, so much detail. It certainly has provided some hope. Is that misplaced for Europe?
Yeah, if you look at the 15% tariff, it's still well up from that 1.5% tariff that it was in 2024. You've got, as you say, a lot left on the table to be negotiated, but this safety clause when it comes to sectoral tariffs. So it's not going to be any worse than anyone else has got. That, at least, a bit of relief here. You talk about the automakers. Toyota shares up 16%. That's the biggest rise since 1987. Can we see the same sort of deal, as you say, when it comes to the European automakers? There is the optimism, as we see in the market there, but overall clarity as well for the BOJ, because you're not going to have as much of a hit
apart
to growth.
from all the politics. We'll come to that in a moment.
Come to that in just a second.
It looks
but
like
would Volkswagen take? I keep mentioning I'm going to be in Frankfurt, in Germany on Friday, talking to Volkswagen. Would Volkswagen be happy with this kind of tariff, 15%? Would that be good enough? For Volkswagen, the European car makers, would they accept these kinds of numbers? Would the luxury names accept these kinds of numbers? Would LVMH, it's got its numbers out on Thursday, we're going to hear from them then. Would they
worth
accept
it for certainty?
Yeah. It could be worse. It could get much worse. You could see Europe responding. You could see it getting nasty. Or is this actually enough of a deal to get Europe over the line as well? And that certainly seems to be what we're pricing in this morning. So European equities are up on the back of this. Now, that could just be global equities are rising, but European equities are up more than US equities, which I think is fascinating. US equities aren't up as much as Japanese equities. Who got the better deal here?
Yeah,
maybe that's what the market is telling us.
Yeah, and that contrast between the performance of the cars is really interesting. It's worth noting, in passing, that the Philippines got a deal yesterday as well, and that was 19%. That's not 15, feels slightly more like 20, doesn't it? It's closer to 20. Barclays citing that 15 to 20% range as somewhere where a lot of these deals are falling. So is it too much to hope for the Europeans to get exactly what Japan got? you mentioned the certainty that the BOJ has when it comes then to the tariff deal, but not the domestic politics, Lizzy. There's a lot happening.
No, indeed. So arguably part of the work, a lot of the work of Prime Minister Ishiba is now done, and the speculation that he was going to quit after this coming to a head. So we've had a report from the Yomiuri newspaper that he's going to announce his intention to resign this month, that he's already told his inner circle that that is his plan. But for the market, it seems like the trade deal matters more.
Oh, way more.
Because if you look at it, we were already this week talking about how if you lose the lower house, it takes historically on average 2 months until the Prime Minister steps down. So this was already priced in. We knew that some status was going to happen.
I think you're going to get a weak government. That seems to be what the market is signalling, and that weak government is going to spend more. That's the fiscal story. And that's the read across into the BOJ, maybe, to what we should be talking about this morning. Should we talk about tech?
Yes, let's do that. We've had lots of earnings.
Oh, my Lord.
No, they're not all tech, but some of them are tech, and it's worth shining a light on that.
I think the tech sector is really fascinating this morning. I think there will be some read across into Europe today, so I think it's going to be really well. I want to start with TI, Texas Instruments, hammered overnight, absolutely hammered overnight. You could see some read across into Infineon this morning on the back of that. You could see some read across into STM on the back of that. Now, Infineon was down 3% yesterday. It could fall a chunk more this morning. So European tech stocks are going to be under focus when it comes to the chip sector. So keep an eye on that. SAP, look at what SAP is saying this morning. It's talking about tariffs. It's talking about the FX story. It's stuck with its cloud guidance. That's been taken as a broad positive. But I think there's some really interesting negatives in here that are worth focusing on as well. So that's worth talking about. Nokia out with a profit warning. Nokia, as we should probably be saying with our Finnish accents, out with a profit warning, citing dollar weakness, talking about the tariff impact as well. We're going to get Alphabet later, and we're going to get Tesla later. Tesla, I think, is going to be interesting. Alphabet can be fascinating as well, because it's at the other end of the translation effect story you get coming back from a weaker dollar. It's translating stronger currencies from the rest of the world back into its numbers. So it'll be interesting to hear whether it talks about that. So I think the tech story, again, just folding in all of the broad narratives that we're talking about. And I haven't even mentioned AI.
Yes, and we thought we would be talking about a tech industry that was maybe broadly, or services industry, broadly protected from the tariff agenda. But no, because you face, your customer base is being hit by tariffs, and so they're maybe less likely to spend money. And then there are the FX impacts. You've mentioned a lot of them there, Guy. SAP, 30% of their sales come from the United States. FX is going to take a 3.5 percentage points off their cloud revenue growth. So they really are able, these businesses, to take what we've seen in markets in response to tariffs and translate that into revenue impacts, bottom line impacts. The Nokia one I thought was really illustrative as well, because they tell us what they were assuming on FX back in January and what they assume now. In January, they were assuming 104 on euro dollar. Now they've had to take that to 117, and that's partly why they see nearly 230 million euros hit to FX. And they're also talking a current tariff hit of 50 to 80 million euros when it comes to operating profit. There's no detail as to how they calculate that, but these are businesses that maybe not in the Nokia case, because that's more tangible, but some of the other businesses, we thought they'd be removed from tariffs, and actually there's still an impact.
But that seems to be the theme so far of earnings season, right? You can't necessarily control F the word tariff and find direct references to it, but as we were saying yesterday, maybe there are euphemisms about tariffs, whether that's uncertainty, or you see these indirect effects when it comes to the FX headwinds.
There are other earnings out there this morning. UniCredit's out there. We'll talk about that in just a moment. We're focusing as well on what is happening in terms of the energy sector. Iberdrola's out with numbers. There's lots of things happening here, but there are themes that run through all of them.
And I think really interesting in the car sector, because we've been asking for a long time, what's the pass-through of tariffs? Who pays the tariffs? And for a lot of the research, I think you sent around something from Deutsche Bank yesterday. We had some other Bloomberg stories talking about, look, it's US corporates and it's a US consumer that's paying this. In the auto sector, it doesn't seem to be the consumer. It seems to be the corporates, whether you're Japanese or US, you're making cars and you're taking it on your margin. We saw that with Japanese car companies dropping their prices into the US to take on those tariffs. And we've seen it with GM talking about a massive hit to their business, $1.1 billion. They took that hit, but they would rather do that, take that on their profits, than pass on higher costs to consumers.
Goldman Sachs is out with a note as well, saying it expects US baseline reciprocal tariff rate will rise from 10 to 15% as you add in some of the extra factors, like the levy on copper. We'll talk about copper a little bit later on what is happening with the metal story. They are saying that the pass-through is slower, but it is there, and it is going to have a big hit in terms of GDP. So it is coming, it is happening, it's happening really slowly, and I think the corporate earnings are a really useful indicator as to what is that story and how it's affecting these markets. Plenty of great guests to talk about this as we work our way through these narratives. Sandra Horsfield, Investec senior economist, joining us in a moment. Amy Gower, Morgan Stanley Metals and Mining head, is going to be joining us as well. Helen Jewell's going to be with us a little bit later on from BlackRock, CIO, Fundamental Equities over there. And Yelena Sokolova, Morningstar senior equity analyst, previewing the luxury story. That luxury story is going to be fascinating from a consumer point of view, but also from a tariff point of view and what's happening with trade.
Well, speaking of tariffs, on the day book today at 9 a.m. London time, the EU and Japan summit will be happening. Sort of underlying, of course, the European Commission President meeting Prime Minister Ishiba. Will she be trying to copy his notes when it comes to what he got on the autos front? Then at 5:30 p.m. London time, we have Chancellor Friedrich Merz of Germany and President Emmanuel Macron of France meeting in Berlin. And then we have lots more European earnings to come. So we have Hochtief, Moncler and Saipem publishing results after market. We have Trump's keynote address at this Winning the AI Race Summit, so continuing the tech theme, and then plenty of earnings to come out stateside as well. Tesla, IBM and Alphabet, all aftermarket when it comes to tech.
It's an interesting prospect, isn't it, copying their notes, because, is there anything interesting going to come out of the EU-Japan summit? Do they want to show that ex-US globalisation and trade still matters and still can happen and drive things? Or is it going to be actually what Ursula von der Leyen learns behind the scenes from the Japanese about how they got this one over the line?
Well, it ramps up the pressure on the EU now to cut a deal.
Yeah.
And South Korea and the rest.
Well, South Korea is important because they've got a huge car sector.
The Taiwanese are there today, I noticed. So, these conversations are still happening.
How many of these will get done by August the 1st? August the 1st is, what, next week? End of next week?
Not long away. We're on the 23rd.
Like yeah, end of next week. Let's call it the end of next week. What else do you need to know this morning, though? OK, let me walk you through some of the other news we're learning about today. France's Dassault Aviation has reiterated its interest in leading the Franco-German next-generation future combat aircraft system fighter jet programme. Leadership would give it sweeping oversight over the project that's caused friction between it and its partner Airbus. That was certainly evidenced, I have to say, in my conversations at the Paris Air Show. The CEO says the company would like to pilot the programme with the ability to choose subcontractors and drop any of those that don't perform. The French President and the German Chancellor, as we've just been saying, are going to be meeting a little bit later on, and this is going to be high up on their discussion. It's interesting to compare and contrast the programme that is running with BAE Systems as the lead. Are we going to see some mergers of some of these programmes? What is Airbus going to do? UniCredit has improved its outlook for full-year profits and shareholder distributions, providing a boost to CEO Andrea Orcel after the bank dropped its bid for rival Banco BPM. UniCredit abandoned the bid yesterday after the firm was unable to secure government authorization for the deal. This deal would have created Italy's largest lender. And back to this Microsoft story. Microsoft has warned that Chinese state-sponsored hackers are amongst those exploiting flaws in its SharePoint software to break into institutions globally. Bloomberg understands that one of those is the US National Nuclear Security Administration. Quite an important distinction, which is responsible for designing nuclear weapons. Quite an important institution. While Microsoft has patched its software, cybersecurity researchers have detected breaches on more than 100 servers representing 60 victims, including organisations in the energy sector, consulting firms and universities.
You just wonder whether that filters through into the White House.
You made this point earlier,
and whether this starts to influence. If this is the Chinese, if these reports are correct, Scott Bessent is meeting with Chinese delegates in Europe actually next week. And is this something that gets onto the agenda and messes with what Trump has called a very good relationship with China right now? Coming up on the programme, we'll get back to some of these earnings stories for you. Nokia has cut its forecast for the year, citing tariffs and currency concerns. We'll keep an eye on its shares at the open, along with all of the other companies reporting results today. Plus, Japanese automakers get a tariff reprieve. We will discuss the knock-on effects to the sector globally. It certainly looks like a reprieve. That is a reprieve share price move. It is still a tariff of 15%, but compared to what it could have been, this is a reprieve. Up next, Donald Trump calls the trade deal with Tokyo historic. Markets are certainly buoyant. We'll discuss all of that. If you have questions for our guests, please get in touch. IB plus BDTV Go is the function, as always, to get in touch with the team that puts together this programme. This is Bloomberg. Welcome back. This is the opening trade. 17 minutes past 7 here in London. So 40 or so minutes to go until the start of European trading. And it will be a positive session ahead. That's certainly what the futures market is indicating. Taking our lead from Japan, the Nikkei up really strongly. Japanese markets up really strongly, up by 3.7% right now as car makers lead. But the market as a whole reacts to the positives that it finds in the Japanese-US trade deal. Let's take a look at how the wider markets are reacting to those latest tariff headlines. A lot of them coming then with regards to Japan. Bloomberg's Valerie Teitel is here. Valerie, good morning.
Good morning, Anna. Yes, the positivity in equity markets following off this really strong session out of Asia. The Nikkei 225 up nearly 4%. It's its best session really since April 10th, since we first got that tariff walkback from President Donald Trump. We are seeing these automakers really on a front foot. Toyota at one point was surging as much or had its biggest surge since 1987. So a big session when it comes to those automakers. Eurostoxx 50 joining in the kind of party here. I think there's some hope that if there is room to budge on these sectoral tariffs, especially on these auto tariffs, that can open up the door possibly to a better than expected deal coming out of the EU. I do want to also mention FX. There are some funny things happening here. We aren't seeing euro strength off the back of that strength in the equity market. That does have a lot to do with the fact that the yen is weakening, not because of the U.S. trade deal, but because of the Prime Minister Ishiba's reported resignation that really opens up a new can of worms in terms of political instability in Japan. So we are seeing some dollar strength off the back of all this as well. So keep an eye on the euro. Maybe it does catch some wind in its sails off the equity market positivity. I do want to end on what's going on in fixed income because we saw those Japanese 10-year yields rise to the highest level since 2008. So we are breaking out to fresh highs when it comes to these yields in Japan. It is pressuring those U.S. 10-year yields higher as well. A lot of this has to do with the domestic politics story in Japan, the idea that if we do have some sort of disruption around Japanese politics with this PM resigning, maybe it could open up a door to fiscal slippage. And we know that JGBs have really been setting the tone for global fixed income in the last few weeks. So watch out if it does pressure Treasury yields higher. Guy.
Going to watch that one very carefully. Valerie, thank you very much indeed. I want to take us back to where Valerie started, and that is the comparison maybe with what we've just seen out of Japan and what we could potentially see for Europe and the United States. Sandra Horsfield, senior economist at Investec, joining us around the table. Good morning.
Morning.
If I applied something similar to what Japan has just got to Europe, what would the effect be? Is this a deal that you think Europe would tolerate? What kind of an impact would it have on European growth?
But certainly a lot better than it looked when we dial back to the end of last week, when there was seemingly no room to budge on sectoral tariffs. I think the possibility now that perhaps there is makes things a lot more easy to countenance for the EU to accept something along the lines of what Japan is seeing. Of course, the car sector is not the only sector. There are other sectoral tariffs at play. We don't know yet where pharmaceuticals ending up. We had huge threats there. So this is not the only story. The question is it a blueprint or one-off deal for Japan? And I think Europe is probably looking at this in a somewhat more optimistic tone than they were at the end of last week.
Is it possible to take these numbers and plug them into a European model and go, this will have a positive, negative GDP effect, this will have a inflationary impact, this will have a disinflationary impact? I appreciate that you probably haven't run the numbers yet, but what would your first expectation be in some of those sort of key metrics?
It's certainly a better deal than it was beforehand. So it will be a positive. It will be a positive for growth relative to the previous threats.
So growth is better. What about inflation, disinflation?
I think on the inflation side, within Europe itself, the question is really, are we getting retaliation by the EU or not? That is what really will make a difference for the domestic picture on inflation within the Eurozone. The US is, of course, a different story, and there's still very substantial tariff drives we have to look at. We celebrate now the small wins, shall we say.
Could be worse.
Only a 15% tariff rise. That's still a far cry from what we were. So there is still an inflationary impact coming in the US. On the Eurozone, really the main question is, will we get retaliation? And perhaps with these types of deals, we may not go down the extreme route.
Sandra, Val showed us the yield picture when it comes to Japan. It could be that Chancellor Rachel Reeves here in the UK wakes up to another nightmare scenario if that indeed infects other bond markets around the world. But in your notes, you say that it isn't so inevitable that Reeves is going to have to miss her fiscal rules or raise taxes. If she doesn't have headroom by the autumn budget, what other option does she have?
It will be quite a challenging situation. There's no doubt about it. At this point, we're still looking at an economy that doesn't have much growth momentum in its own right. We don't get a tax base expanding to the extent to generate those tax revenues to make everything much easier on the fiscal front. So what could we do? Well, I think ultimately, perhaps tax rises will have to come into the picture of some sort. The difficulty is, where do you do that without stifling growth momentum?
Exactly.
How do you then generate growth? How do you revenue? How do you not scare away those who do generate the revenue in this country? And these are very difficult choices. Perhaps the simplest and the easiest thing to do will be to yet again freeze income tax thresholds, as we have sometime. It may not address all of the issue, but the main question is really what the OBR will say the longer-term growth prospects in the UK will be. And there the jury is still out. So bad news now are very short-term news, but perhaps not the thing that will make the biggest difference to how much headroom or not the UK needs.
OK, so maybe a fudge, maybe some fiscal drag. And if we come back to this bigger tariff story, we've got, of course, the ECB meeting tomorrow. I'll be heading to Frankfurt. When you look at the data as things stand, and when we have so much uncertainty about what a US-EU deal will look like, how dovish do you think Lagarde is going to be? Do you think that if that 30% tariff does return by August 1st, which was beyond their most severe scenario, then that puts a September cut on the table for the ECB?
It's certainly a possibility. I think at this point, what Lagarde will try to achieve is not to box herself in. We simply don't know where this is going. We've had better news from Japan. We've had worse news elsewhere, bigger threats. So we just don't know where this is going to end up. So pre-committing to anything at this point wouldn't seem the sensible thing. I think we are in a position where we're in a relatively good spot. The mantra we've heard from all the central bankers is we're in a good place. Well, certainly we are, in the sense that inflation is on target in the Eurozone. We are at neutral rates. We have room to maneuver either way. And I think that's the story that she'll really try to emphasize at this point. Let's wait and see. We're well positioned here. So no rate change this time. And openness.
That good place narrative might work on inflation because it's at target, but around the growth story, the wider threats to the European growth narrative right now, to Lizzy's point, 30% would be well above the extreme scenario. You point out that the extreme scenario the ECB was painting out as one of many last time around was only 20%. I mean, there's not a million miles between 15 and 20, and that's what the ECB called extreme. And that would be a recession. So how do you think they will talk about the tariff threat this time around?
I think the narrative will be very much, well, we're still in this wait-and-see phase. There could still be a situation where the hit to growth is material and visible. And in that case, the ECB will have the ability to respond. And I think that's the main story of reassurance, perhaps, that there is still room to act if necessary. But it may not be necessary, on the other hand, depending on how things play out. So it's really the inflation picture that will drive things. On the ECB scenarios, we have to bear in mind, yes, the overall picture was for a 20% tariff rate, but we also had the assumption that Chinese tariffs would clip back right to the 120, 150% sort of level that we were at beforehand. So you can't directly read across from one to the other. OK, so that extreme scenario had some other assumptions in it. Sandra, thank you very much for joining us. Sandra Horsfield, senior economist at Investec. Coming up on the programme, we'll dig into yet more tariffs, the metals picture with Amy Gower, metals and mining commodity strategist at Morgan Stanley. The copper sector, really interesting right now. This is Bloomberg. Welcome back, everybody. 30 minutes until we get the European opening trade. A lot of optimism being built into the European picture this morning. We've had headlines around trade about Japan and the United States. Well, what has that got to do with Europe? Well, it certainly has got a lot of people thinking, what can Europe get here? What can the EU specifically get here when it comes to trade conversations between the United States and Europe? So as a result of that, futures are higher. Bond markets, though, are interesting. And
There's a lot of action happening in Japan. I say with one eye on a picture of the Japanese Prime Minister just leaving the scene.
Yes. Saying nothing, which is really interesting. So European bonds there's a little bit of a sell-off happening. What you are certainly seeing a sell-off is in Japanese bonds. The 10-year is up by 8 basis points this morning. There is this expectation, we've just lost the shot of Prime Minister Ishiba, and he is still Prime Minister Ishiba in Japan, speaking. Hasn't discussed his fate as Prime Minister. He's
met with former
Prime Ministers. But he's not going. The index, the Japanese index, the Nikkei was up by 3.5% into the close over there. But you are getting a fairly big reaction in the Japanese bond market, A, because of what we've just seen in the 40-year auction, which didn't go particularly well, and also just this expectation that maybe we are going to see weaker government in Japan, and as a result of which what we are likely to see is therefore more spending. But he hasn't gone. It's one of these sort of things where we're all anticipating that he's going to go, and there's all these multiple reports that he's going to go. I feel like we've sort of lived through this in the UK.
And the yen was expecting him to go.
Exactly.
I should say the yen was really weakening into this, wasn't it? Along with these expectations of fiscal spending.
There's the headline.
And then we get the yen turning tail.
No truth to reports that I will be stepping down.
Wow.
Prime Minister Ishiba. So those multiple reports that we had this morning,
3 different outlets,
that he was, I think it was, I'd get a step down. No truth.
What on earth was he talking to those former presidents, premiers about? We'll have to ask Jill Deesis, our Bloomberg News desk editor. She joins us now. Jill, what are we meant to think here? We're on tenterhooks for Ishiba's resignation. When's it coming?
Yeah, I mean, Lizzie, I think that as you're seeing from, some of these latest reports, obviously an incredibly live situation here. But I think there's a couple of things that we really have to keep in context. First of all, Ishiba had, it was a pretty bad showing this weekend with the upper house election. I mean, that's the first time, given the LDP, sort of losing that control. You combine that with the election that he walked into when he took office last year, losing the lower house. I mean, it's the first time in 55 years that we've really seen this kind of situation happen with the prime minister in prior elections. I mean, even losing control of one of these houses here in Parliament. I mean, that's kind of blazed the groundwork for Prime Minister to step down at least within the next few months. So it's hard not to think that he's at least thinking about that. That certainly was the situation that we were walking into at the beginning of this week. I think where it gets a little bit tricky with Ishiba is a couple of different things here, right? First of all, there was kind of this understanding of, did he have to wait until the U.S. and Japan reached some kind of a trade deal? Obviously, we did get that result just a few hours ago. That 15%, obviously, certainly a step up from, what we had initially expected when you had Trump kind of, playing hardball with Japan, talking about a essentially 25% tariff on these goods. So that's a little bit better than expected, but still a very difficult situation to navigate. Maybe it's the case that if you're the LDP, you kind of want to walk into, whatever's next for this party with, some kind of a replacement on hand, a leader in place. I think that's what we really got to look for here. Maybe he steps down at the end of August, but yeah, obviously a very fast-moving situation.
Jill, is there any possibility that actually the trade deal and the positive market reaction that we are seeing today, Japanese autos absolutely flying, the Japanese stock market rising rapidly, does that give him maybe some stability? Could there be a possibility that actually the trade deal saves Ishiba's from a fate of having to go early? Because it kind of feels a little bit like that potentially this morning.
Well, Guy, I don't know, because there's so many domestic issues within Japan that are still, I think, really key to how exactly this party moves forward, right? I mean, when you look at the opposition parties that did particularly well in this upper house election, a lot of them were focused on sales tax cuts and other things related to, cost of living, some concerns about price pressures within Japan. It's really difficult for me to see how, if you've got Ishiba in place, as a prime minister that's now overseen 2 significant losses for his party, the LDP, in the upper house and again the lower house last year. I mean, it's kind of a situation where he stays, and then what happens with domestic policy, right? Do you just kind of try to dictate policy, or not dictate really, but how to navigate policy on an issue by issue basis? I mean, if you don't have your same coalition in place, that's really difficult. So while obviously the relationship with the U.S., this trade deal is part of this, I think that is one small part of some of the issues that are ultimately facing Japan. So that does have to be a factor here. But yes, I mean, look, like, I think obviously we still have to, sort of dive through exactly the details from this trade deal. That 15% obviously looking very good to traders right now. But there's a lot of other questions about this trade deal. I still have some questions about this, $550 billion Japanese investment fund that Trump's talking about. Not sure where that money is exactly coming from or how long that kind of comes into place. So I again, really have to emphasize that this still feels a little bit like a live situation. Still a lot of details to sift through in this plan and how exactly all of this works, even if that top line figure of 15% looks pretty good right now.
Yeah, and certainly we're seeing stunning response from some of the car makers in Japan, Jill. Mazda up by 17.8%, Subaru up, Toyota all up by more than 14% for the Japanese car sector. So really interesting to see the effect of this this trade deal. Jill, thank you very much. Jill Desis with important caveats about what we don't yet know about that trade deal. Well, clearly, if you're making cars, you're going to be interested in metals and accessing metals. And that takes us nicely on to our next conversation. A group of at least 4 ships carrying copper are rushing to reach US ports before August to get ahead of the planned 50% tariffs on the metal. The vessels are among the last batch of copper cargoes whose owners are betting they can clear US customs just before the tariff bites. The shipments represent the final scramble to cash in on a lucrative arbitrage trade that has upended the global copper market since US President Donald Trump first floated the tariffs. Joining us now, Amy Gower, metals and mining commodity strategist at Morgan Stanley. Amy, thank you so much. We've done some great reporting here at Bloomberg around some of these ships that are currently in the Pacific trying to get to Hawaii, of all places, to deliver their copper because it's closer to Australia where they left from, and apparently they don't have much experience of taking copper shipments, but that's where we are. That's the weird world we're in. So how much are you watching August 1st as really important for the copper market, and what changes from then?
Yeah, look, it's been an interesting one because we really didn't get very much notice for the implementation of these copper tariffs. We had the Section 232 investigation launched in February, and I think the market was generally thinking by October, November we might hear something, and then we got this surprise announcement a couple of weeks ago with just sort of 3 weeks to go, which is not very long in the scheme of moving goods around the world. So. And it's very, very important to get that metal in on time because you'll have bought this at the LME copper price, so about $10,000 a tonne. If you don't get it in before the tariff date, you're going to have to pay 50% tariff on that, so another $5,000 or so. But your US delivered price is only trading about $3,000 higher, so you're actually going to lose money if you arrive after that date. So yes, very, very important. And I think what we'll have to see from the 1st of August is what's the US going to do in terms of imports? Are they going to keep bringing in metal? Who's going to pay for that? If not, are we going to see US imports collapse? And what's that going to do to the global copper price?
Yes, because there's so many dynamics here. A lot of this delivery to the US has been perhaps front-loaded, so maybe we don't see as much copper going there later on in the year. And you say in your notes that you see the spread between COMEX, so in the US, and LME in London. You see it at about 40% by the 4th quarter, which isn't 50%. So does that mean you're assuming that not all of that 50% gets implemented or not all of it gets passed through? What's happening?
So the key driver there is that the US, as you say, has had significant opportunity to front-load metal. So we think at least there's about 6 or 7 months' worth of import coverage. So they could take it to zero and work through this inventory buffer for about 6 or 7 months. And so with that, the marginal ton of copper is going to be pricing on something that came in before the deadline rather than something that came in and had to pay this tariff. So I think we really need to work through that inventory buffer before we move towards pricing in that 50%.
But you kind of wonder, like, if you get the metal in time for August the 1st, do you just sit on it or do you sell it immediately?
I don't know. The other factor in all of this as well is what is happening with the trade deals and what is happening in terms of what there is no clarity in the Japan deal as to what is happening with metals.
Yes.
There is no clarity in any of these deals, really, on what is happening. Metals is this kind of story that stands out around the world in terms of our inability to be able to calculate it. Are we going to see sort of a series of scenarios like this where Trump puts a tariff on, or you get different deals being done with different countries in terms of metals, and you can kind of you basically, if you've got a better deal in Japan, you could send metal to Japan and then send it onwards through a how confusing is the picture going to become?
Yeah, I'd say, look, there's probably two things to think about here. So one is, what is the aim behind these metals tariffs? And ultimately, that is to develop the US industry, get the investment in the smelting, refining, processing, mining capacity. And so if you're giving exemptions, that's quite challenging for the producers to make these investments. And if you're creating lots of uncertainty, so, you would argue maybe you wouldn't then get exemptions if that's what you want. And then the second thing is going to be, if you are doing exemptions, if you're only exempting, say, a country that can supply 5% of the US's requirements, does that really make a difference? Because that last ton of metal is going to be what sets the price. So, in copper, you'd be thinking about Chile. In Canada, aluminium, you'd think about Canada. Japan arguably is a big steel exporter, so it could be important, but it's going to depend by metal which country is the most important.
Do you think, therefore, the objective of the Trump administration would maybe to keep metals out of deals, basically just to leave it as being ubiquitous, that everybody pays that there are no carve-outs on metals?
Yeah, I mean, the way we're seeing it so far, I guess, we had the steel and aluminium tariff started at 25%. They've gone up to 50%, even after a couple of months of implementation. So that's sort of doubling down on what you're doing. Copper came in earlier and higher than expected. And look, these mining companies have to make investments on, 10, 20, 30-year timeframes. So I think for now, probably what we're seeing is probably the way it will be.
Can I ask you about the China story? Because this impacts not just copper, but also iron ore. We've seen iron ore at a 5-month high. Does the demand story there actually have legs?
So seasonally, this is actually quite a tough period for iron ore often. So this is where you get your shipments coming through after the disruptions during Q1. And then often as well where China's steel production does ease off a little bit. So you end up with inventories building. At the moment, we are seeing, I'd say, probably more of a sentiment-driven move, really, than real fundamentals. So positioning was very short because of these fundamentals I talk about. Lots of people don't want to be long iron ore at this point in the year. And then all of a sudden, we're getting signaling from China, both around steel production cuts, which actually can have the counterintuitive effect of boosting steel mill margins. They can actually hold a little bit more iron ore, but then also the big infrastructure projects. So I think it's less about how much metal we're going to need for this dam, but really the signaling China is willing to spend on these big projects, use the metals.
Because then if it comes back to sentiment, we can throw in another metal. We can bring in gold as well. You're seeing gold on track for its longest monthly winning streak in over half a century. But if you get tariff certainty, if these talks in Stockholm go well between the US and China, for example, does that winning streak continue or end?
Yeah, I think there's definitely an uncertainty element to the gold trade. So I'd say that the key things supporting it at the moment are, first of all, is the weakening dollar. So I think if that does continue and we do see US growth perhaps under pressure relative to other countries, then that should be broadly supportive for gold. We've seen a very, very strong inverse relationship. The other thing is the ETF buying, so the exchange-traded funds. That has been 4 years of outflows and then suddenly buying a lot this year. And I think that's what's being driven by uncertainty. So if we do see that start to come out, that could give the gold rally a bit of a pause or even a pullback.
Amy, you were referencing that big mega dam that's been planned in China. Lizzie was asking about iron ore prices. I received a note from Barclays this morning in a slightly different context, but saying, what if the question they ask is, China, what if the worst is over? I mean, are you starting to, what are you fundamentally thinking about the growth story in China and how much maybe supply side reform or policy support we're going to see around that?
Yeah, so we definitely have some headwinds coming in the second half in terms of just how much was exported in the first half from China, and particularly sort of front-loading ahead of US tariffs. So I think we will have to deal with probably the repercussions of that. But definitely in terms of what China can do for its own economy, I would say hopes aren't particularly high. So that's always helpful where you are getting positive news, is that the market isn't broadly expecting this already. And then I'd say what they can do, boost that domestic consumption, do the big infrastructure projects, which has historically been what China has done to boost its GDP, boost its economy, and then I think continue exporting, but perhaps find new markets. And we've seen China do this very successfully in solar panels, electric vehicles. They've pivoted their reliance as different barriers have gone up against them.
OK, we're going to leave it there. Thank you for coming. Nice to see you. It's very germane this morning in terms of everything we're talking about. Amy Gow, metals and mining commodity strategist, joining us from Morgan Stanley. Coming up, we're going to turn back to what is happening in the European equity space. Thales boosting its sales target on defence orders and aerospace demand. There's lots of stocks to watch this morning. Keep an eye on what's happening in the semi-sector as well. We'll focus in on that. That's all coming up next. This is Bloomberg. 48 minutes past the hour. What are we, 11 minutes away from the market open, and we're going to see a positive market open here in Europe. London looks like it's going to be something of a laggard. We'll come on to the details as to why in a moment. Chip sector is going to be fascinating. There's lots of corporate earnings that we need to be folding into all of this. However, it is the trade story that is dominating the narrative. The expectation maybe here in Europe this morning is that we're going to see a similar deal to what we saw in Japan. Mark Cudmore is here, Anna. He's had lots of caffeine.
Yeah, I think so.
I think it's coffee.
I think so.
Is the
in
trade
the break,
this morning.
there was evidence of caffeine. There was certainly a lot of energy around this desk. Let's see if we can channel that for the audience as well. Mark, the market is trading like this is really good news, this Japanese-US trade deal. Car makers in Japan are up by more than 14%. 15%, is that not a good deal?
Look, you're right. I have been very frustrated when I arrived this morning. Not as much caffeine as normal. So first of all, for automakers, it is a good deal. And I think actually you've identified the key point of why this is particularly good for Japan. Because I think suddenly it's making Japanese car makers much more competitive against US car makers. Again, undermining what Trump is trying to do. But there's a couple of things that are really upsetting me. One is, if suddenly we're declaring 50% as the new normal, 15 to 20%. We've just seen the Philippines deal, we've seen the Indonesia deal, we've seen the Vietnamese deal, all on that kind of level. If they're all going to get deals in that 15 to 20% level, well, then suddenly there's no need for them to be competitive on price. And that means that the full costs get passed on to the consumer. It's also still cheaper than building in the US, which means Trump not only reshores manufacturing, which was never going to work anyway, we all know that, but it's also ensuring that the costs do not get borne by the manufacturers elsewhere. They get borne by US consumers. So this is only damaging. Now, despite that, this has been traded really, really euphorically, and I kind of get it, even though it makes no sense, because everyone's realizing we're going to get more trade deals over the next week. And somehow, bizarrely, several people have said to me this morning that if the EU announces a trade deal that's below 30%, that's going to be a massive win for Europe. But EU stocks haven't priced in 30%. So it makes no sense, and yet I see that's going to be the price action, because right now everyone's going, you know what, the next week is going to be only positive headlines. We've got to trade those positive headlines. We'll worry about the reality later. The reality is not good for the US in particular. Okay. It can be good for others.
I have never heard you talk faster. Just going to say that.
He is determined to rain on your...
That's a big challenge.
He's determined to rain on your morning.
OK. Meme stocks are up. The market loves all this. Yeah. Equities... but is this a good market? So if I'm a bull, do I like this market? Now, this is a really kind of weird thing to say, because actually in so many ways you could argue that this is becoming, and some people have talked about this overnight, a little irrational.
Steve Sosnick calls it a flight to crap.
Yes.
I actually don't think that's entirely fair. I think some of the macro backdrop's good. There's massive fiscal spending everywhere. Not most important in the US, but we're getting it in Asia, we're getting it in Europe. We've got long-term commitments from NATO, probably won't come through, but still, we've got massive fiscal tailwind. The fact is, dollar lowers an easing of financial conditions. And earnings have held up okay so far, a little bit more worrying in Europe. So the actual macro backdrop's not too bad. And institutional investors are underweight this rally. That's the kind of bull market you like. You love it when people aren't fully involved. So I actually think the macro backdrop's not terrible. The problem is we're heading towards real damage from this trade tariffs policy, and that is not priced at all.
What about the yen? What on earth is going on with the yen, Mark?
I told you I have no idea about the yen. Why did you ask me that? OK, if you want, I have been trying to think. I think the yen will ultimately weaken from here. I think that we're going to continue to see pressure to go for JGB yields to go higher, but I don't think that'll be positive. I don't think rate support comes through for the yen. I think also this spike in Japan stocks, given what I'm saying, will probably actually see some people take profit, because it's a big foreign favourite in recent years. So that'll be a little bit of outflows to the margin. And I think given the political situation, continued pressure on the yen. So I think pressure in the end, but I'm not high conviction about it, and I think the next week's going to be difficult.
We hold our breath for the fate of Ishiba. But
he's not holding his breath.
No, I know. I want some of what you've had this morning, Mark. Bloomberg's Markets Live Executive Editor, Mark Cudmore. And remember, you can get up-to-date analysis and insight from Mark and the team by going to MLIV Go on your terminal. Let's flip from the macro to the micro. Chloe Melee is here with our stocks to watch. Chloe.
Good morning, Lizzie. Let's start with the car sector. We're expecting some movement this morning. There's a couple of things to keep in mind. The first is that in the US, General Motors flagged really rising costs due to tariffs. Then on the other hand, we have this Japan-US trade deal that is kind of easing concerns about the wider trade war and really boosted the shares of Japanese car makers. So we'll see how investors really digest those two sets of news at the open. Obviously, Renault and Stellantis have been in quite a bad spot. BMW, Volkswagen holding up a little bit better. We'll see how much that picture changes at the open with that Japanese trade deal. Moving on to defense, Thales boosted its organic sales forecast for the year this morning. That's on the back of really strong defense orders, really strong aerospace demand as well. That might lead to a little bit of a boost across that defense sector in Europe. Obviously, Rheinmetall has been absolutely soaring. BAE and Thales are a little bit lower, but obviously we are on an upward trajectory, so we'll see how that changes when the open happens. And then finally, semiconductors. So ASM reported orders that missed estimates this morning, or last night, I believe. Bloomberg Intelligence said that the demand in China was just not enough to offset lower demand from key clients like Intel, for example. And obviously tariffs are weighing also on the outlook. That might be dragging down the shares of other really key names in the sector, like ASML, of course, and then semiconductors. And we have seen here quite a lot of weakness over the last few months, and that is set to probably continue.
Chloe, thank you very much. Chloe Milley picking some of the stocks that could be on the move this morning. There are so many to choose from. She could also have mentioned, of course, UniCredit. We've seen from that Italian bank an intention to return more money to shareholders, which could push that one higher. They've stepped away from that BPM bid, couldn't get the government on side, of course, there. And Nokia and SAP, we've talked about those. Those could be movers.
So many movers. Is it the earnings story that moves stocks this morning? Is it the trade deal that moves stocks this morning? If it's the trade deal, do we see it feeding into sectors like luxury and autos? Is that the space we should be watching this morning? Is it something that we should be watching out in terms of the currencies? There's so many factors you can plug into this market
as well. I mean, London's going to underperform anyway because of the focus on the European deal, but then the iron ore price is weaker too.
Exactly. Not particular outperformance expected from the DAX, despite all the hope for the car makers. But let's see what actually happens at the open. It's coming up next. This is Bloomberg.
Wednesday morning, good morning. There is a lot going on this morning. There's a lot to fold into these markets. There's a lot to think about. Corporate news, what's happening in the macro front, the data, what we're seeing in terms of the trade deals. It's all going on this morning. How do you fold it into the equity picture? That's a little bit more nuanced. I think this is yesterday's picture, the white line being Europe. We come in, actually, to be honest, fairly flat towards the end of the day. No real movement. The US rallies after that. But then there's so much action kind of after this. To the right of this chart here, you've got what's happening with the trade deal. That needs to be factored in. You've got things like Texas Instruments to fold into the numbers as well. There's an awful lot that the market needs to think about beyond what we saw at the back end of the US session yesterday. Lizzy, the override, I can't work out whether the story this morning out of Europe is extrapolating Japan or whether it's the corporate news story.
Well, if you look at the green across my screen, Guy, the futures picture looking optimistic because of the trade optimism on that US-Japan deal. Does we get a bit of copying and pasting when it comes to a US-EU deal? You would expect to see a lot more enthusiasm out of the DAX futures, but you've also, as you say, got to factor in that disappointment when it comes to the tech story out of SAP, but also from across the pond when it comes to Texas Instruments, weighing potentially at the open on the chip story as well. Downside as well, less upside when it comes to the FTSE perhaps because of the iron ore story. You talk about the metals, it's slipped from that 5-month high, so maybe the miners are going to be suffering when it comes to the London Open as well, Anna.
Yeah, absolutely. So two reasons why London might underperform. The iron ore price that you point out, and also the EU being the focus of things this morning and the optimism there. Chip stocks in focus because of Texas Instruments, UniCredit in focus because it's increasing guidance for net profit and distributions, and SAP in focus after it talked about the FX hit it could take to its business, Guy.
OK, here we go. We're going to find out. We're going to see the numbers. It is time for the opening trade. Let's see exactly what happens. What are we focused on this morning? FTSE 100, nothing to see here yet. We're expecting that market to climb, maybe up by around 0.4%. We're expecting better performance elsewhere. But I'm not sure actually maybe it is. Maybe there is an index story this morning. Maybe there is a kind of macro top-down, big picture, Japan into Europe kind of narrative that we need to focus on. But there's also the kind of the bottom-up narrative in terms of what we're getting in terms of the earnings story. But the earnings story, again, tells us a lot about what's happening with the macro picture, what's happening with tariffs. and FX. There's a lot to fold in. So here we go. We're getting some numbers. Stock 600 is up by around 0.7%. FTSE's up by around 0.5%. CAC, though, is up by 1.2%. If you get a similar trade deal out of Japan to you get in Europe, is that good for the luxury sector? Don't know. But there's also fairly good names in terms of corporate reports out of Japan, out of France as well this morning. The IBEX is up by 0.5%. You can tell there's a bit of news and a bit of thinking going on in Germany this morning. It takes a little while on days like today to get the DAX open. We'll see some numbers in a moment. In the meantime, let's focus on the sector story and the single stock story. Lizzy, what have you got?
You've got everything but one sector in the green this morning. Consumer products and services leading the gains at 1.2%. So luxury having a good day. Travel and leisure not far behind it. Utilities are the only one that's in the red, down 0.25%. But when we dive into that single stock story, we mentioned the chip story. So you've got ASML and BE Semiconductor up, but you know, ST Micro and Infineon suffering because, as we say, we had that Texas Instruments disappointment yesterday, so perhaps a bit of a read across there. We were looking for a bit of upside for the automakers because of this US-Japan deal. Could we see some similar deal carved out for the European car makers? We've got Stellantis and Renault and Volvo all up more than 2% this morning. When you talk about the earnings as well, Anna, you flagged UniCredit. Their shares up 3.3%. Of course, that Banco BPM deal off the table, as we've heard. So that is now down 2.6%. We've got UniCredit, sorry, I mentioned UniCredit, but Thales up 1.8% off the back of their earnings, and Alstom as well up 2.2%. But could this really, as you say, Guy, is it because of the earnings or is it because of the overall enthusiasm?
Yeah, well, I'm just going to say all the things that Lizzy just said, but with different words, because I think you made all the important points this morning.
Sorry, I stole the sandwiches.
No, not at all. No, I think it's excellent because we've got this, luxury goods are really doing well this morning. And that there's not a huge amount of news flow there. We're waiting for numbers out of LVMH, waiting for numbers out of Montclair. So this must be to do with the tariffs, or at least it looks as if this is around tariff expectations. Yep. Will this be well-founded expectations? We will see. I mean, we'll see if there's any translation from what Japan got into Europe.
Well, that's why you buy it, isn't it? You buy your luxury goods in Japan now, not China.
OK. I don't do either, but that's talking of luxury goods, Porsche is up quite nicely. Mercedes is up 4.1%. Volkswagen is up by nearly 4% on the back of this. So
really just jumping then.
You're getting extrapolation out of Japan into Europe this morning without a shadow of a doubt. There are some corporate stories that I think are worth focusing on. I take a look at Infineon this morning. Infineon was down 3% yesterday. It's dropping again this morning. On a two-day basis, Infineon is now down by nearly 6%. That's quite a chunky drop. So the chip sector is certainly feeding the equity news out of the US. The TI news is feeding through as well. SSAB is also down really sharply as well. So there are some really interesting corporate stories, standalone single corporate stories this morning that are worth looking at.
And another one of those that's firmly in the tech space and speaks to what you were just talking about there is SAP, down by more than 3% on the back of their numbers. And as we talked about earlier in the programme, a really interesting example there of businesses that you might think were a bit removed from the tariff impact. But if your customers are affected by tariffs and if you are affected by FX, you can still feel that tariff pressure, it would seem.
Yeah, well, let's get some analysis now. Helen Jewell, who's Fundamental Equities EMEA CIO over at BlackRock, joins us around the table. Good morning, Helen.
Good morning, Lizzy.
We're feeling the vibes this morning. Mark Cudmore certainly was. We've got stocks in the green, car makers enjoying the read across from the US-Japan deal. Do you think that that's actually going to translate into a deal? How optimistic does it make you when it comes to the equity picture?
Yeah, I mean, it does make me feel optimistic. It's a really interesting market at the moment because, as you've all been observing, the market itself is not actually doing very much. You've had these kind of 1% shifts for actually a number of days now, which has been something we haven't seen since the start of the year. But actually what you're seeing underneath is big moves both in sectors and in individual stocks based on both certainty. When they move a lot is when you have absolute certainty. We're seeing that this morning in Japan. We've seen it, and a lot of people miss this, in the renewables names did very well after the big beautiful bill was perhaps not quite as bad as people thought for that sector. And then you're seeing this read across that is also causing, I would say, these single digit but quite significant single digit moves where the market is thinking on the short term there might be some reprieve and maybe reading things in. The only thing I would be a little bit cautious of is that reprieve then often kind of moves quite quickly in the other direction. We saw this last week with ASML. We saw some moves, quite kind of big moves one way and then the other, and then you're seeing some more moves on that stock again today. So in the short term, you're seeing quite a lot of moves because of this read across. the market is optimistic, but until we get absolute certainty, I wouldn't get too carried away.
So is the reason that you've got US earnings surprising positively more perhaps than European earnings because there's this expectation that the European deal will end up at the 30% tariff? Is that the prospect that's weighing on Europe at the moment?
Yeah, on European earnings, actually a lot of the names, the earnings themselves have actually beaten, from very low expectations, but still beaten. Where the stocks are being hit, and again you're seeing this morning, is actually on the narrative about the orders and the outlook. And that is where tariffs is definitely coming into play. And also FX, you're seeing that this morning, is also coming into play. So there is that uncertainty playing. And I think we're probably past the point of trying to put an exact number on what it might be. All it's saying, and all the companies are really saying in Europe, is we have got this uncertainty on orders, and until that really comes through, we're not going to be able to give you the certainty and outlook. So actually the numbers themselves have actually been pretty decent, but the outlook and the guidance is what is actually weighing on the European market at the moment. And that's not going to be resolved until we really know. And the question is really, how long is that going to be? Is it August the 1st or is that a little bit longer?
Yeah, Helen, when it comes to FX and the impact of FX in corporate earnings, how do you think about that conceptually? Because I find reference to FX both fascinating and extremely boring, both at the same time. Because boring in the sense that this is not something companies control. They just take whatever the euro dollar is, for example. But on the other hand, if it's a fundamental structural long-term shift to a weaker dollar, you start to maybe think about how you set up your business to cope with a different exchange rate than the one you had back in January. So how do you interpret comments from SAP, from Nokia, around the weakness in the dollar, the strength in the euro?
Yeah, I mean, at the moment, there is a feeling that it is flattening out. So we're not really seeing this big shift of corporates, for example, into the US. Those that already had it, they're continuing. But we're not seeing it actually shift anything in corporate strategy at the moment. What you are starting to see, however, is these companies starting to say it is impacting on their earnings for this year. And therefore, really the way we're looking at this at the moment is firstly to understand which companies have got that real exposure to the dollar, and then really keeping an eye on where that dollar is going to go. Is it flattening out, or are we going to see another step down? Because if we do see another step down, that's when I think it's going to see a real differential between the companies. But at the moment, that's probably not the narrative that we're using as our base case. It is much more either stabilisation in the dollar and therefore no real shift in terms of corporate strategy of the reaction of that.
And we were talking earlier about how luxury goods are doing well today, which remains the case. And you like luxury goods even heading into this earnings reporting season. Why is this going to be a good time for luxury?
Yeah, selectively luxury goods. Those that have the real pricing power within the luxury space. Something that Guy knows nothing about.
I know everything about
that. You know, the ones here, Ferrari, we've seen, have got real pricing power. Some of the others, maybe LVMH, there's more of a question mark about the strength of that real pricing power. The key thing is, so you have to be very selective within the luxury space. The key thing, I think, is the real focus is how much in the European space are there of these sleeping giants, these big names that actually haven't really contributed to the European story so far and are starting to wake up. I was hoping that semis would start to do it. Perhaps I was a little bit ahead of the game, and we're not maybe going to see it until that certainty comes through in the market. The luxury goods space, that is a space that I think we maybe start to see those reawakening and contributing to the European story. And I know I'm going to bring it back again because I think people are forgetting about it. The renewables names, they've done really well year to date. EDP Renewable up 25%. And why? Because of the certainty that came through in terms of people being able to understand exactly how they play. And they anchor to the mega theme of AI. Europe needs power and there's a solution.
There's risk, isn't there? We just saw that in Equinor this morning. They had to take a big charge because of what they've been doing in the United States, and there was a sort of a delay to one of their projects and reduced expectations about another. I only mention it because even when the deal, the big beautiful bill, didn't look so bad, there are still penalties to be paid somewhere.
Yeah, and there's always going to be risks in the equity market, and those uncertainty, and our role as fundamental investors is to really understand which ones we can navigate and really believe have got that strong positioning. So, yes, there are some that do less well. You know, Schneider Electric is another name we really like. We think it's well positioned, both for the AI trade and also making sure that we have enough power to literally keep the lights on. So you do need to be selective in these sleeping giants. This is not a kind of all-in story. But I think they have been ignored by the market. And I think once we get through this earnings season, that could give us the second leg as we come into H2.
you still like this market at 24 times?
Yeah, I mean, I do, actually. I think the key thing there is the flows and the flow picture. The capital is still going into the market. And whilst the capital is still going into the market, that is supporting valuations, even when we've got the uncertainty that we're seeing.
So if the uncertainty crystallises, so you've got this kind of weird scenario at the moment where the market kind of, investors like it, but they know that there's a hit coming. They know that tariffs are going to be a problem, but there's not enough evidence of it yet. And I hear what you're saying about uncertainty. TI got punished last night because it couldn't tell investors what was going on. So there's huge amounts of uncertainty at the moment, but the market's therefore saying, well, we don't know yet, and as a result of which we're going to continue to palm money into equities. When we get the certainty, are we certain that that's going to be a positive?
No, I think people are being a bit unfair on the market. I've heard you use the word complacent quite a lot in terms of the market. I think that's a little bit unfair. The market and the expectations of earnings have gone considerably down. I mean, they're basically flat for Europe now. Yeah. They've already started to bring in a lot of that tariff uncertainty. So I don't think that the market is pricing or waiting or doing nothing. I think a lot of that has already been priced in. And what the market is being supported by are longer-term themes for earnings and capital availability. Recession is the one thing that would be a really bad thing for the market. Right. Enormous tariffs would be a bad thing for the market. But a sensible level of tariffs, the market is already assuming.
So Goldman Sachs is out with a note this morning talking about the fact that we're going to get 1% GDP in the United States. Now, that's not going to be a recession, but it's 1%. And it's way down from where we were, yet equities are at record highs.
Following a huge period of both 0% interest rates, following both COVID, all of that capital that came into the system.
There's still too much liquidity in the system.
Not too much.
OK, there's still a lot of liquidity in the system.
Enough liquidity to support the kind of valuation levels that we're seeing if there's no recession.
If there's no recession. The caveat is there. OK. Helen, nice to see you.
Thanks, guys.
Thanks for stopping by. Helen Jewell, Fundamental Equities EMEA CIO at BlackRock. Core 6 looks like this. We're just hearing from Helen about some of the stocks that we should be watching out for. Look at LVMH this morning. Look at Ferrari up nicely on the back of this story. In fact, you've got green across the screen. Novo's up nicely. Are we going to see sectoral carve-outs for the pharma sector? Don't know. We'll wait. We're going to watch. We're going to see what that deal develops like here in Europe. Chloe Melly is here with more on the stock story.
Good morning, Guy. Let's start with the car sector, and we've got green across the screen this morning. So that is on the back of the Japan-US trade deal, which kind of eased concerns about a wider tariff war and really is boosting expectations that we might see something similar deal in Europe as well. So Renault, Stellantis, Mercedes, Volkswagen, all of them up this morning by quite a bit on the back of that news. Moving on to SAP, so Europe's most valuable company is down 3.5% this morning. It reported earnings that were fine but not really great. The sales in the cloud and the cloud segment really disappointed investors, and it also flagged tariff uncertainty, of course, and currency headwinds. So that is dragging down SAP. Moving on to UniCredit. So UniCredit, just a day after abandoning its bid for Banco BPM, it reported earnings and it lifted its guidance for the year and also said that it plans to return 9.5 billion euros to shareholders this year. So investors seem to be quite happy about that, and we're up 2.5% this morning. And then finally, we've got the semiconductor sector. So ASM reported orders that missed estimates this morning on the back of lower demand from Intel, but also tariff uncertainty weighing there as well. That is dragging down BE Semi and Infineon as well, but ASM particularly down 8.2% this morning.
Chloe, thank you very much. Chloe Melly from our equities team with a rundown of some of those stocks and sectors on the move. Coming up on the programme, we'll dive further into some of these results for you this morning. We'll take a deeper look at the SAP results. Europe's most valuable company, as Chloe was saying, warns of the impact of tariff pressures. A second quarter earnings fall just short of estimates. Details next. This is Bloomberg.
what we are seeing in a very few industries. Take the U.S. public sector, take manufacturing. I mean, there are already customers who got hit hard by tariffs. And obviously, there we see some elongated sales cycles. I mean, they have tighter cost controls as they, already feel the pressure out of the tariffs. And these are the moments where we have to, of course, convince even more with strong business cases. The good piece is, Tom, when you look at our half-year 2 pipeline, that is actually very strong. And the customers see actually our software, our AI, as a solution to overcome those challenges.
That's the SAP CEO, of course, Christian Klein, speaking earlier to Tom McKenzie. And SAP shares are down after the European software giant reported cloud growth that fell short of estimates amid concerns over US tariffs and FX, the two related, of course. Bloomberg anchor Tom McKenzie, who spoke to the SAP CEO, joins us now. Tom, tell us more about the drag on SAP's earnings.
Yeah, so top line, cloud and software revenue for the quarter coming in up 11%. As you mentioned before the break, just slightly below the estimates. The drag really is on the macro concern. You read the analyst responses to this, and they really zeroed in on the caution coming through, particularly from the CFO and the statement that accompanied the results. That is dragging on the stock. They are being hit by tariffs in some sectors, and Christian Klein was talking about manufacturing and about the public sector, of course, that they supply into, and those elongated sales timeframes. So that is a headwind, has been a bit of a headwind for the business. But again, he says the solutions are still there, particularly when it comes to supply chain. Their customers want their software solutions to negotiate and navigate some of those supply chain issues. The other drag is the currency effect, so weaker dollar. And the CFO, again, talking about this. And I asked Christian Klein as well about the FX impacts and the way that they're trying to mitigate that. Top line is, if you get a 1% drop in the dollar versus the euro, that equates to about a 0.5% drop in terms of the growth for SAP. So that was a drag in the second quarter. On current FX levels and rates, you could see continued drag into 2026. Christian Klein was pretty clear about that. That drag could be there again in 2026, of course, dependent on how the currency and the dollar moves into that period of time. Year to date, you've seen the stock prior to today up about 10%. Now with the down 3% in the session today, you're seeing gains of a little under 6% year to date for this company that supplies, of course, the software into 90% of Fortune 500 companies for things like supply chains, HR and finance. He also talked about AI and saying that the demand for that in terms of adoption, and I'm quoting, is going up, up, up. So he really sees that as a catalyst into 2026. They've got that $18 billion pipeline through the back end of this year and possibly into 2026 as well. It's softened a little bit, the pipeline, but again, he's really focused on that AI demand and that strong adoption he's seeing from his enterprise clients.
Fascinating interview, Tom. Thanks very much indeed. Tom McKenzie. Let's turn to defence now and figure out what is happening in the European space. Lockheed Martin was the big story out of the United States yesterday. This morning we're focused on names like Dassault Aviation, the French company. It says, and we saw this from its CEO yesterday, a continuation of the commentary that he's been having on this subject. Trappier is saying basically that he wants Dassault to lead the Franco-German next-generation future combat aircraft systems fighter jet, FCAS for short, with sweeping oversight of the project. Basically, they want to be in the pilot seat of this project. It comes as orders for the company's Falcon business jet. Remember, they've got two sides of this business have dropped to their lowest level in 5 years. The reason for that, pretty straightforward. There is a significant expense now of exporting aircraft into the United States. Let's talk about all of this. We've got plenty of other factors we need to fold into this as well. Our new global defence editor, Jerry Doyle, joining us around the table. Good morning, Jerry.
Good morning.
Let's talk about where we are with the European defence picture when it comes to fighter jets. You've got this programme, FCAS, which is basically French. You've got Airbus in there, though Airbus is notionally the German part of it. And you've got the French part of it, which is Dassault, which made the Mirage. It makes the Rafale fighter jet. It thinks it has the capability to lead this project and should be. How much clarity do investors have right now on what is happening here? And are we going to get some more of it a little bit later on when we hear from the President of France and the Chancellor of Germany when they have a conversation about this programme as well? Where are we? Because this is a critical project.
It is. There might not be much clarity immediately. It's certainly more of a geopolitical problem right now than an industrial problem. Airbus Defence and Dassault both have the capability to, pull off a project like this. It's more a matter of figuring out who's going to have the work share and how that's going to be divided up. Now, for Dassault, of course, it's vitally important. For Airbus Defence, it's vitally important to get the most of that project they can, because going forward, a sixth-generation plane, which is what FCAS is designed to produce, is going to be tremendously important, not just for the defense picture, but for the bottom line of these companies.
So you wonder what that meeting will produce out of France and Germany later for the defence industry. But when I look at Dassault versus Thales and its results this morning, I wonder why Dassault is suffering from the tariff threat, but Thales is able to boost its sales target.
Well, part of it is that defense spending in Europe is going to be less affected, of course, by the tariffs, whereas Dassault's bottom line is has a much larger civilian component to it. These Falcon business jets, which have been hurt by the tariffs as customers sort of dial back their orders amid the uncertainty. They're not sure whether they're going to proceed forward with them. But you can see from Dassault's earnings, they didn't change their guidance. They're pretty confident that the defense spending in Europe is going to carry them forward through the rest of the year. And hopefully the tariff picture will become less cloudy and they'll be able to move forward with those Falcon orders as well.
Jerry, as we're getting earnings coming through from European corporates in this space, there's clearly a lot of expectation around this sector, given what Germany is planning, what lots of countries are planning around spending on defence. How long does that take to come through? Are we seeing outlook statements that reflect a lot of that very positively, or is it just way too early to see the impact?
It depends on the system. Something like FCAS, which is very complicated, involves companies in several different countries, lots of new systems, new technological developments. It could take years for those results to hit the bottom line, for the system to develop, for the sales to start. Whereas other things like ammunition, like communication systems and radars, things that are already in place, things that have already been developed and are possible to sell right now, those are going to create a more dramatic, immediate effect.
How does the European defence sector stack up against what we're seeing in the United States? Lockheed Martin was out with numbers yesterday, took a massive charge related to a number of different programs. It's probably just a little bit of kind of clearing of house in terms of the numbers behind some of that. But nevertheless, do the European defence names have a better prospect right now than those over in the United States? How do the two compare in terms of what they offer right now?
Well, there's sort of an interesting dynamic right now where Europe obviously wants to spend a lot more on defense. NATO countries have pledged to spend more on defense. But there's also this sort of decoupling happening with the United States. So they're going to be looking to spend more domestically as opposed to buying from U.S. companies, theoretically. We'll see how that plays out. With Lockheed Martin, they sell at the very top end of the business, and their F-35 jet has been sort of criticized domestically in the U.S. for cost overruns. We saw the Pentagon reduce its spending on the F-35 for next year. Britain recently released an audited report that showed that the program expenses had ballooned here as well. And so, the charges they're taking are not related to that, but it shows the headwinds that they're facing with these advanced programs, but they don't have anything, at least publicly, moving forward that they can say, yeah, this is our next thing, this is what we're going to do.
Okay. Jerry, really good to have you with us around the table. I'm sure we'll have you back, given all of that spending and that story and how it plays out. But Global Defence Editor Jerry Doyle, we thank you for that analysis. As we're looking at the defence names in the green across Europe, Rheinmetall up 1.5%, Thales off the back of its earnings up 0.5%. But that is the story across the European equity picture. The Stock 600 at the moment up 1%, because we have all of this enthusiasm about the trade narrative, but also all of these corporate names reporting as well. And we're going to dive even more into that next. Will luxury brands defy expectations ahead of second quarter earnings due this week? We'll speak to Morningstar senior equity analyst Yelena Sokolova next. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session, and as you can see, it's green across the screen. We've got the enthusiasm in the European equity session. Following that in the Asian session, it's set to continue in the US session as well because of this US-Japan deal, and we have autos, the best performing sector across the European continent. I also want to focus on banking because we've had results from UniCredit this morning. Those shares also gaining today after the Italian lender raised its full-year profit and shareholder distribution guidance. This a day after it dropped its bid for Milanese rival Banco BPM. So let's get more on those UniCredit earnings. Bloomberg's Tom Metcalf, who leads our EMEA finance coverage, is with us around the desk. Morning, Tom. I want to start on BPM. How much of a setback is this for the CEO, Andrea Orcel, that it's off the table? Or is it off the table, this deal?
Yeah, well, it's definitely a setback, and, it's kind of one of his big ambitions to make some of these big deals happen. But, I mean, as you look at their results today, ironically, I think a lot of shareholders will maybe be breathing a sigh of relief, remove the distraction of a big M&A integration. And UniCredit, as these results show, doing pretty well just on its own. So I think that it'll be really interesting to see how this pans out, right? As you say, this deal is certainly at the moment, it seems dead. But I always, especially with Andrea Orcel, you never say never. And it's perfectly possible that, he's just come out, I think, and said, we would not revisit this unless circumstances significantly changes. So there is a little bit of wiggle room there. And, it's perfectly possible we might be talking about this deal again maybe in a few months or a year's time.
Yeah, he is a deal maker, we know. So we'll wait to see where the next deal comes from. In terms of the underlying earnings story then, Tom, I was looking at where they beat estimates and where not. And it looked like the fees side wasn't the area where they beat, but it was on net interest margin that they seem to be doing well. So the sort of bread and butter of banking. Yeah,
exactly. And that was sort of the message they're pushing is, look, look at us as an underlying business. We're doing very strong performance here. I would also point out there were quite a few one-off gains, and probably the most interesting one for me was there's about 200 million gain from their Commerzbank stake, effectively, presumably the uplift in those shares there. So, all these sort of deal making is kind of feeding through, but in quite a rarity for the non-acquirer. It's actually working out okay because Orcel's made money off going to, taking a big stake in a Commerzbank.
So Commerzbank's paying off anyway.
Exactly.
Yeah.
Regardless.
Nice investment.
Yes, nice little investment coming through. That's working very nicely, ticking along. We'll see what happens next. Tom, lovely to see you. Thank you very much indeed for stopping by to see us. Tom Metcalf joining us on the banking story. Let's turn our attention to what is happening with luxury this morning. Luxury stocks doing quite well. We've got a raft of second quarter earnings out this week. But more significantly this morning, we've also got a Japanese trade deal that some are extrapolating and maybe seeing opportunities for Europe to replicate. And we'll see whether or not that could be the case and whether or not that would be good for European equity story. Joining us now is Morningstar senior equity analyst Yelena Sokolova to talk about all of this. Good morning, Yelena.
Good morning.
If we see a trade deal, how are you thinking about a trade deal between the United States and Europe and how it would impact the luxury sector? And if we saw, say, 15% tariffs being applied, would that be good for the names like LVMH and Merz?
So first of all, there is direct impact of tariffs, of course, which impacts the potential prices and bottom lines of these companies. But there is also indirect impact, which you can see in the stock market and the consumer sentiment and the feel-good factor among U.S. consumers, which may be more important for luxury sector. That's why I think the indirect impact of those tariffs and all those deals is more important for the sector. That's why the reaction is quite positive.
In terms of, therefore, what you think we're going to hear from names like LVMH, we're going to get numbers tomorrow. What do you think the narrative from the European equity story is going to be right now?
Yeah, so demand situation still remains quite difficult for European luxury names. So far, the ones that have reported have not really seen a change of patterns. So Chinese demand remains fairly subdued, specifically the travel demand and real estate prices remain down in this market. And American demand so far has been quite volatile. So hopefully with more clarity on the deals, consumers in that market could get more confidence.
Well, yeah, when you've got the S&P bouncing around from record to record, Yelena, do you think that ahead we will see more demand from the U.S. luxury market in the U.S. for the luxury market?
Yes, I think clearly. I mean, there has been a kind of some predictive power of S&P performance to luxury, and it affects the feel-good factor, and that could result in an uplift in demand. And specifically, what I would like to stress that there has been a very strong demand from U.S. consumers, kind of post-pandemic, that has been falling off already in 22, 23, and 24. So we are at much healthier base overall for this consumption, and we could see some pickup if the stock markets are strong and the sentiment is there.
Guy referenced the kind of read across to a potential US-EU deal from a Japanese trade deal. But I wonder specifically, given that Japan is such an important market for the likes of LVMH, how much of a boost do you get specifically from this Japan deal for those names?
Yeah, so Japanese market is has been historically, of course, very important. Now it's more of a market that also has some has substantial part of it from tourists, which are mainly Chinese tourists. But generally, Japanese consumer is still important, and it is the health of this consumer should contribute positively as well.
Yeah, and Yelena, thinking about the consumers in Asia, Chinese consumers, when they travel to Japan or when they're at home, what are you thinking about their appetite to buy luxury at this point? Because it's a really important market for the luxury sector.
It has been very important indeed, but their overall spending is still somewhat, it's still below the pre-pandemic levels, essentially. So what we're seeing here is that there are still substantial savings in the system for Chinese consumers. So they could have spent, the way Western consumers splurged post-pandemic, but they simply didn't because the sentiment is not there. And the sentiment, I think, is affected by the real estate prices that remain in the negative territory, not as negative as they used to be, but still negative. And also by the economic growth, which is somewhat weaker. So I think once the basically even the real estate market prices stabilize, there could be an uplift, and there could be additional spending of all those savings that have been accumulated during COVID years.
And Yelena, some of the luxury names also own drinks companies or drinks brands. I'm thinking of LVMH, of course, but there are others. And cognac, we know this has been part of the complex relationship between the United States and China. How are we expecting, with all kinds of crosswinds and pressures on those kind of businesses, how are we expecting that sector to perform?
Yeah, that has been a more difficult or somewhat difficult sector within luxury. Beverages tend to be quite cyclical because it's largely wholesale distribution as well. So now the demand has been hit. Also, what is applicable to these names is that the pricing has been quite a tailwind in the recent years, and now consumers are, with the cost of living crisis, they are maybe less likely to splurge. So I think there is still kind of the cyclicality is definitely there. Plus there is concerns about let's say younger generations drinking less alcohol, but that has been kind of offset by premiumization historically. So that is something that we expect would continue to some form.
Thank you very much, Yelena. Good to speak to you. Morningstar Senior Equity Analyst Yelena Sokolova, setting us up for some of the earnings stories that we're going to get from the luxury sector coming this evening and through the rest of this week, of course. Coming up, we talk about autos as European shares soar following US-Japan trade deals. There's that read across. We've had some revenue guidance from some of the automakers here in Europe as well. We'll talk about what is ahead for car makers. This is Bloomberg. Welcome back to the opening trade, 8:42 in London, 42 minutes into a session that looks really very green for many of these markets. Off earlier highs, I should point out. We've had some strength coming through in some of the automakers, more on that in a moment, some of the luxury names. And we do see a lot of positivity, broadly speaking, across European stocks, right across really from the US-Japan trade deal. So let's talk about what that means for autos, because that's an area of real focus this morning. Following that US-Japan trade deal, we've got 15% tariff set for Japanese imports to America. European car makers are tracking their Japanese peers higher, not quite tracking, following slightly at their heels, amid relief that levies weren't as high as 25% on Japanese car makers into the US. For more, let's bring in Craig Trudell, who leads global autos coverage for us. Craig, very good to have you with us. So let's talk about what we've learned here. I mean, this isn't objectively good news compared to last year where we were for Japanese car makers, but these stocks are reacting like this is really good news.
Yeah, I think it's a comparison to what it could have been as opposed to if you look objectively at where tariff rates were and where they're going. It's not a positive, but it's not a total disaster. I think we've also seen these companies take steps to lower the prices at which they're exporting, which I think is really interesting. Maybe that's not good for their top line, but sort of takes away some of the fears of the need for drastic price hikes in the U.S. that would also affect volumes. And so I think it's proving to be the case that a lot of these manufacturers maybe are more resilient in the face of these tariffs than the fear was out there, even just in the last couple of months.
And what does this mean for US automakers? Because we heard from GM yesterday a $1.1 billion profit hit because of tariffs, and yet it sounded to me like the plan is no plan.
Yeah, I think they're pretty. My sort of ears when they talked about pricing. I sort of thought back to when Jeff Bezos, got into hot water so quickly when there were reports that maybe Amazon was going to raise prices. If you were to have a sort of, quintessentially American company jack up prices citing these tariffs, you really run the risk with this administration. I think they're far from alone in being reluctant to move prices up. I think will we see some under the surface adjustments to prices, not necessarily out and out MSRPs going up, but, pulling back of incentives, pricing for options that will, sort of offset some of these tariffs. I think we will see those. I don't think you'll necessarily hear GM and other automakers sort of talk about those openly for fear of getting on the wrong side of the White House.
What does this all mean for Tesla?
This, I think a lot of, the
chuckles,
the ways, the ways in which the U.S. market is changing under this administration. It's not just tariffs, of course, as we know. This is a real serious pullback on regulations for electric vehicles. The regulatory credits that have been, essentially free money for Tesla for years, to the tune of, more than $12 billion of revenue over the years. That is seriously going to be, reduced as a result of the fact that, the rules have been absolutely gutted. And, there's going to continue to be some of that revenue from outside of the U.S., but the U.S., California, the fuel economy and the tailpipe emissions rules, that was a significant source of that revenue.
And when you get those Tesla earnings, we've already had SpaceX warning that Elon Musk is going to get more into politics again. Surely that's bad news for Tesla when he's just got his hands back on the steering wheel.
It's hard to read too much into that for me, because I think, risk factors are risk factors. You sort of put anything in there that might happen. We'll see. It does seem to me to be consistent with him indicating just in the last few weeks he's going to start a new party. And so that to me was SpaceX's lawyers sort of covering their bases in the event that he does really follow through on those threats.
Yeah, that was fun for a while, wasn't it? That's right. I'm sure it comes back. Autos and parts, the best performing sector here in Europe this morning, then, Craig, up by 3.4%. And so it seems that European companies, investors in these European companies are looking at what Japan has achieved and saying we could have something as good in quote marks, because we've already talked about the ways in which it's not good. But is that a realistic prospect? We see most of the car makers around Europe up by more than 3% today.
Yeah, I think if the read across here is anything, it's that the sort of big scary numbers that Trump has bandied about, that ultimately he'll come down from those, that those were perhaps a sort of negotiating tactic on his part. The read across from this deal with Japan is even in the case of a trade partner that he's railed against consistently for years, much in the way he's done the same with Europe and with Germany in particular, that he has indicated some willingness to come down from the highest numbers that he's thrown out there that have been cause for concerns if you're an investor in these companies.
What's the biggest threat for European car makers right now? Is it tariffs in the US, or is it China producing a lot of cars and those cars ending up here in Europe?
Yeah, I think it's both. I do think that, they have significantly more business here in Europe that's at perhaps greater threat as a result of the fact that, the Chinese are so competitive and getting traction, even despite the tariffs that have been increased on Chinese EV imports.
Yeah.
And in the U.S., they will benefit from those relaxed rules. So there's
definitely
going to be some offsets there.
It's just interesting because the Europeans are talking to the Chinese.
Yep.
At the moment. That's the kind of high-level tariff talk that we're having right now. And you do wonder whether actually the market's kind of missing that conversation that could ultimately be more important to the European car makers than ultimately what happens across the Atlantic.
Yeah, I mean, I do think it is also definitely manufacturer by manufacturer, right? Where, a company like BMW that has, its biggest plant in the world in South Carolina, is much better positioned than, say, a Porsche, which has zero production. And that's really going to be an issue for them in the second half of this year.
Craig, thank you very much. Thank you for joining us. Bloomberg's Craig Trudell with the latest on the car sector. So, Guy, we've got European equity markets up by 0.9%. As I said earlier, it's off earlier lows, but, the CAC 40's up by more than 1%. We talked about luxury. That's a big part of that. Luxury stocks outperforming in expectation.
In expectation that the deal is going to be good. And that's the same for the auto story. The autos are up by 3.59. What I think is also interesting is the healthcare sector is up this morning. So there's been this threat over the last few days, and it's been interesting to see what Astra's done over the last few days in terms of pumping money into the United States, trying to maybe manufacture more there to get around a potential tariff hit. But that tariff hit could be enormous. And maybe there's a view coming out of this trade deal with Japan that maybe actually that healthcare hit isn't going to be as bad, and that Europe could do better. So the healthcare sector is doing quite well on the back of this morning. So it's autos and healthcare that are doing quite well. There's only a couple of sectors in negative territory, utilities and technology. Technology is taking a fairly significant hit this morning on the back of the SAP numbers, what's happening with Nokia, what's happening with the TI read across. There's a negative hit coming through quite strongly.
Yeah, everyone but ASML when it comes to the chip sector seems to be in the red there. But I also just want to flag defence because we've had a couple of earnings out this morning. Thales boosting its sales target, as we were discussing with Jerry. Dassault, private jet orders dropping because of the tariff story. And when you look at those, Thales down 1.5% at the moment. And in defence, I haven't got Dassault on my screen, but there it is in front of you, up 0.6% off the back of that.
Let's talk about the banking sector. We've had, of course, news flow there. We talked to Tom Metcalf earlier on about what was going on with UniCredit. They've stepped away. They were making approaches in Germany and in Italy. They've stepped away from their approach in Italy, stepped away from Banco BPM. They couldn't get government support. So as a result of that, you see Banco BPM shares down, as you'd expect. UniCredit goes higher. And their focus, they want that to be on the underlying business. And they've talked quite positively, as Tom was telling us, about what they've delivered. Even if there are a few one-offs, in terms of net interest margin, they managed to deliver better than the market expected.
It's been an extraordinary morning in so many ways.
Yeah.
All of the
every sector in focus.
Well, every sector in focus.
Every theme.
Every theme's in focus. You've had the trade deal with Japan. You've got Japanese politics front and center. But there's much more to come throughout the rest of the day. That trade deal's still going to be there. That trade story is going to be there with Japan. You've got, we don't know what's going to be happening with the Japanese story.
The Japanese Prime Minister's still in post. We should probably say that, shouldn't we?
Yeah, that's what I mean.
Yeah. Because it wasn't entirely clear whether he would be.
For now, though.
Yeah.
For now.
Yeah.
We've got loads of other things on the daybook, though. At 9 a.m. London time, we've got that EU-Japan summit, Ursula von der Leyen meeting Prime Minister Ishiba. Then at 5:30 p.m. London time, we have Friedrich Merz meeting Emmanuel Macron in Berlin. Then we've got all of these European earnings, Hochtief, Moncler, SAPIM, all aftermarket. We have Trump's keynote address at this Winning the AI Summit, AI Race Summit. And then aftermarket, we also have US earnings, Tesla, IBM, Alphabet, really getting the Mag 7 going. But let's bring in Bloomberg's Valerie Teitel. She's with us around the desk. She's been watching the Japanese action with earnest. Let's just look at the yen, though, at the moment, because Mark Cudmore couldn't make sense of these moves, Val. We're weaker a tenth of a percent at 146 per dollar here. But maybe, is this an opportunity for the yen carry trade, we have some people saying?
No, look, I think it is very head-scratching that we have this big news on tariffs and FX is barely budging. I mean, before we were talking about how the way to play tariffs is FX, and that's clearly been upended, I think, yet again by today's price action. But the yen has really had two things pushing and pulling it, the push being the positivity around Japanese growth, now that the car tariffs are now 15% instead of 25 as expected. And then on the flip side, the push, I guess, of perhaps more government instability. That could be something that could really drag the yen farther lower if we do have this period of government instability and markets are getting more worried about fiscal dominance or the fiscal spending of this new government or the new prime minister. So that push and pull has kind of kept the yen flat. But I, for one, am kind of shocked to see that the euro is now performing this morning.
Yes.
We had all this positivity in European stocks on the back of this trade deal. Take tech out of that. ASM, I know, is down 10% after results.
Yeah.
But those tariff-exposed sectors doing really well, and we're not seeing that kind of positivity in euro dollar today.
It is curious as to why. I just do wonder whether it's a kind of derivative of some of the other FX crosses that are maybe feeding back through into all of this. Do we need to wait for certainty to get that? It feels like there's more certainty this morning. Maybe. I don't know. And it seems that the market, and you and I discussing this first thing this morning, the market wants certainty on so many things. Mm-hmm. We've got a little bit out of Japan this morning. The market's extrapolating a little bit of that into Europe. Why the difference between the FX and the stock story? I don't know. But is there greater expectation that we get more certainty now than there was yesterday?
Well, at least I think when it comes to earning results, the market is seemingly punishing those who don't have more certainty than they did back in April on how tariffs are punishing their business or perhaps changing their business. We saw Texas Instruments yesterday where the CFO said that it wasn't clear how much of the surge in orders was due from tariff front running, and the market didn't seem to like that. Even though the sales orders were pretty decent for TI, they wanted to see more clarity on how tariff are impacting the businesses versus April. Kind of same with GM yesterday. They repeated the same kind of tariff hit that they did back in April, $4 to $5 billion hit from tariffs. They repeated that same range. There wasn't any more clarity on it, and the stock was punished afterwards.
Helen Jill was talking about this as well earlier.
Oh, yeah?
Yeah.
But, you find it astounding that we're having all of this chaos when it comes to earnings and tariffs, and the return of meme stock mania has come back.
I wanted to ask you about this, Valerie, because I feel like you were ahead of this. You and Guy were talking about this yesterday morning, and now we see the story on the terminal from yesterday evening about meme stock fever spreading like it's 2021. We remember it well.
Yeah.
What stood out to you?
Well, the shares of Kohls surging 100%, over 100% in yesterday's session. And even the fact that this stock, Open Door Technologies, was 10% of total trading volume on Monday. So it's really astounding to see this come back, even though, fine.
That sounds worrying.
Equity markets, yes, it does. Equity markets are at all-time highs, but you don't have bored traders sitting at home with stimulus checks. So what is exactly driving this?
Well, Helen still thinks that actually it's still there is still a lot of liquidity in the system from those stimmy checks that are still sloshing around in the system.
That needs to hike.
Yeah, exactly. But if you're a bull of this market, is this what you want to see? And the argument probably is no.
No, this is frothy activity, and I think that does scare some people who might be long U.S. tech stocks at the moment, that we are kind of seeing this price action. Now, the tech trade at least can take a whole nother direction tonight. We do have Mag 7 kicking off earnings. We have Alphabet and Tesla, as well as IBM, starting the round of tech earnings today. I think the focus for Alphabet will be on their cloud performance, and then on Tesla, it's about their robo-taxis and what they guide there.
Absolutely. I mean, so many earnings coming over the next 24 hours. I'm nervous with
it'll be great.
Trepidation. It will be great. Bloomberg's Valerie Teitel, thank you very much. We have a strong performance for European stocks this morning. Stock 600 up 1%. The pulse is next. This is Bloomberg.